Hey friends, welcome back to the channel. I'm Iggy and you're watching the Investing Iguana. If you're new here, I cover everything from stocks and finance to CPF hacks and strategies to grow your wealth. Fun fact, the Investing Iguana was ranked 8th in the 2023 Influential Tigers by Tiger Brokers with over 768,000 reads and 53,000 likes. With over 650 videos and more than 300,000 watch hours, as of December 2024, we've built an amazing community of smart investors like you. Today, we're diving into something every income investor loves, dividends. Specifically, we'll look at 4 Singapore stocks paying out dividends this February. Whether you're already building a dividend portfolio or just starting out, this one's for you. Ready to see if any of these stocks deserve a spot on your watch list? Let's dive in. The year of the snake brings dividends. As we welcome the year of the snake, it's also time for the first earnings season of 2025. For those of us who love dividends and who doesn't, this is an exciting period. Companies are announcing their financial results and, more importantly, declaring dividends. But let's be honest, keeping track of all these announcements can feel like drinking water from a fire hose. That's why I've done the heavy lifting for you. Today, I'll break down 4 Singapore stocks that are dishing out dividends this February. Whether you're into rides, consumer staples, or hospitality plays, there's something here for everyone. Keppel DC REIT, the data center powerhouse. Let's kick things off with Keppel DC REIT. If you have ever wondered where all your Netflix shows are stored or how your cloud files magically appear when you need them, well, data centers are the answer. Keppel DC REIT owns 25 of these data centers across 10 countries. Their assets under management, AUM, hit a solid $5 billion of December 2024. Last year, they made headlines by acquiring 2 massive data centers in Singapore, KDC SGP7 and KDC SGP8, from their sponsor, Keppel Limited. To fund this acquisition, they held an equity fundraising exercise that included a private placement and preferential offer. Here's where it gets exciting for investors. They've already declared an advanced distribution per unit, DPU, of 0.204 duit for the period from July to November 2024. This payout will hit your account on February 10th. Mark your calendars. Now let's talk about performance. For 2024, Keppel DC REIT saw its gross revenue rise by an impressive 10.3% year-on-year to $310.3 million. Net property income climbed by 6.3% to $260.3 million. And while their full-year DPU only inched up by 0.7% to $0.09451, it's worth noting that their portfolio occupancy remains high at 97.2%. Plus, they achieved rental reversions of around 39%, which is massive. So what does this mean for you? If you're looking for stable returns from a sector that's only going to grow as our world becomes more digital, Keppel DC REIT could be a strong contender for your portfolio. Fraser and Neave, the beverage giant. Next up is Fraser and Neave, or F&N, a name that's likely familiar to most Singaporeans. From iconic drinks like 100 Plus to Magnolia Milk, F&N has been a staple in our lives for decades. F&N had a solid fiscal year in 2024, which ended in September. Their revenue grew by 3% year-on-year to $2.2 billion, driven by strong performance in their core beverage segments. Even better, their net profit jumped by a healthy 12.7% to $150.2 million. Here's the sweet part. They've declared a final dividend of 0.4 per share, which will be paid out on February 14th, just in time for Valentine's Day. If you're looking for a little extra cash to treat yourself or your loved ones this month, F&N might just deliver. What makes F&N interesting is their growth strategy beyond Singapore. They recently secured land in Cambodia to build a new dairy facility that should be operational by early 2026. This move positions them well to tap into Southeast Asia's growing demand for dairy products. Closer to home, they've also introduced new packaging options like a family-sized Magnolia milk bottle. A smart move that caters to households looking for value and convenience. If you're after steady dividends from a company with regional growth potential and strong brand recognition, F&N could be worth considering. Jumbo Group, seafood specialist with global ambitions. Now let's turn our attention to Jumbo Group, the name behind popular dining concepts like Jumbo Seafood and Ng Ah Sio Bak Kut Te. Jumbo had a mixed year in FY 2024. On one hand, their revenue grew by 6.5% year-on-year to $190.4 million, while gross profit rose by a similar margin to $125 million. But on the flip side, their net profit dipped by 6.5% to $13.7 million due to higher depreciation and staff costs. Despite these challenges, Jumbo still declared a final dividend of $0.05 per share, half of last year's payout, which will be distributed on February 12th. So why should you care about Jumbo? For one thing, they're not just sitting still. They're expanding aggressively across Southeast Asia into markets like Thailand and Vietnam, while continuing to deepen their presence in China. If you believe in the long-term growth of Asian dining culture and don't mind smaller dividends for now, Jumbo could still be worth keeping on your radar. CapitaLand Ascott Trust. Hospitality with global reach. Last but not least is CapitaLand Ascott Trust, CLAS, a hospitality trust with properties spanning prime locations across 45 cities in 16 countries. For the second half of 2024, CLAS reported revenue growth of 6% year-on-year to $423.2 million and an even stronger gross profit increase of 8% to $198 million. Their distribution per stapled security, DPSS, came in at 0.0355, a slight drop of 7% year-on-year. But when adjusted for one-off items like divestment gains, core DPSS actually rose by 3%. Here's what stands out. CLAS completed over $500 million in divestments last year at premiums to book value, unlocking net gains of $74 million. They also carried out 3 acquisitions across Singapore, Japan, and the US, while investing $250 million into asset enhancement initiatives, AEIs. If you're bullish on travel recovery and believe that hospitality assets will bounce back stronger post-pandemic, CLAS offers both income potential and growth opportunities. So there you have it, 4 Singapore stocks paying dividends this February. Keppel DC REIT, a tech-driven REIT benefiting from digital growth. Fraser and Neave, a consumer staple expanding across Southeast Asia. Jumbo Group, a seafood specialist navigating higher costs but still growing. CapitaLand Ascott Trust, a hospitality play riding on travel recovery trends. Which one speaks to your investment goals? Are you more into stable REITs like Keppel DC or consumer staples like F&N, or maybe hospitality trusts like CLAS catch your eye? Let me know in the comments below. I'd love to hear your thoughts. Dividends are fantastic for building passive income streams, but remember that no investment is without risk. Always consider the bigger picture when choosing dividend stocks. Factors like growth potential, market trends, and even global economic conditions can make or break your returns. If you found this video helpful or learned something new today, don't forget to hit that like button and subscribe. Your support helps us keep creating content like this for our amazing community of investors. And if you want more insights into Singapore REITs specifically, like whether now might be the biggest buying opportunity since the crash in 2020, check out my video titled Singapore REITs Crash, Biggest Buy Since 2020. See you